And welcome out. That means we are now here live on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets, market news, stock market charts, anything that's really grabbing our attention that could affect the financial markets at large, including economics and corporate news. Have some fun while we're doing it. As you can hear, if you're a veteran, I am still losing my voice. I'm going to bring the crew right in because of that. Matty, how you doing today, brother?
Tim, doing good. I'm excited to be here with the crew to break down a market day of pretty much nothingness so far. But it's kind of like a little bit of the calm before the storm. We talked about how the market might be setting up for a potential buy opportunity if we can, we broke it down yesterday and we'll do it again today right there about that confirmation. We put it 34.45, 34.50. And you're kissing into those moving averages today and you're playing a little defense. So we're going to break it down from a technical perspective today, and I'm excited to hang out with the crew for a little bit.
Yeah, and Marky, how you doing, sir?
Listen, I love this market. I think it's amazing. It's my favorite market ever. Listen, but I'm a huge theta seller, right? So this market can yo-yo for like 6 weeks, and I'm as happy as I can possibly be. So, yeah, I mean, it's funny how one person's gem is another person. This absolutely stinks, depending on exactly how you approach it.
Well, I think it would be a very healthy thing for the market to kind of rattle back and forth. You and I were talking about that. And quite frankly, I believe every trader out there should learn how to adjust to market conditions as they change. I'm not calling this neutral yet by any stretch of the imagination, but you should have the ability to trade theta and delta depending on what market conditions are in front of you. I think those skills are kind of mandatory in my personal opinion.
Yeah, and if you didn't catch it last night, Tyler did a wonderful YouTube there on our Tackle Trading YouTube channel, wonderful webinar on selling theta and specifically selling theta in a high volatility environment. So definitely something if you're new or even if you're experienced. I know I've watched it. I'll probably watch it again because when the architect speaks, you want to listen.
And Cody, can you add that to the hero position on our YouTube playlist? And I think if you want to find it right here, Matt, you'd have to click on videos right there.
Yeah.
And then right now.
See, that's the thing that always confuses me about YouTube. It's like, okay, where is the video?
I know, right?
It's so confusing.
Well, if you're confused, think how somebody who doesn't know YouTube would get confused trying to find stuff, right? I mean, definitely there's some training and there's a learning curve with the YouTube channel, but that's where those playlists really do benefit. I thought Tyler's webinar was fantastic, Mark. There's no question about it. And if you haven't watched it, definitely catch the replay. Matt, break that market down technically if you can.
Yeah, let's take a quick peek at this from a daily perspective. Obviously, as the battle plays out, as this support level tries to form right there at 3,300, right where the 50-day moving average is, it's not going to be that, well, I don't want to say it's not going to be. One day doesn't mean make that, but there's more likely going to be a battle there right at those 20-day, at those moving averages, trying to fight to get back above those. And so really kind of what I see today is this is kind of one of those calm before the storm type days where there's not a lot of news out there. There wasn't a lot of major earnings reports. In fact, the only 2 earnings reports that I really want to talk about were Restoration Hardware, because it's a Tackle 25 stock, and Gamestop, just because I just want to talk about Gamestop. I don't know why I have an emotional desire to talk about the death of Gamestop. I don't understand that. Tim, why do I have an emotional desire to talk about the death of Gamestop?
I was going through the earnings reports today, Mark, real quick. Sorry. And I was thinking, all right, is Matt going to bring up GameStop? Of course
Matt's going to bring up GameStop because, this is one of the things I love about investing. Like, for whatever reason, pharmaceutical companies, I just don't really resonate with them. And there's a lot of other companies that I just, I can understand them. I just don't care. There's these things in life that you resonate with, and a lot of them have to do with your occupation, your passions, your interest, and you should, and a lot of wise investors that have been successful have said, gravitate to those because you already understand them. You already want to know, and you'll dive deep and you'll understand. Matt's a gamer. Matt is a gamer. Matt is a gamer, and Matt is an old gamer, in his 40s. And so Matt's been around, and GameStop used to be this iconic, this is where you went. When a new release came out, where did you go? You went to GameStop. And sometimes you stood in line.
I have so many fond memories of sitting at a GameStop talking with my son, 6, 8, 10 years old, and just watching him geek out over all the games and testing them out. And, it was a
Mhm.
family thing for me and him. And so it's just, it honestly is sad. I'm sad that they didn't evolve with the online model and really work on their web presence. But, oh, just another porous report out of GameStop today.
Well, the thing about it is, I mean, there are lessons obviously through the history of these kinds of companies. GameStop had to evolve. They needed to evolve, and they have failed to do so far. We'll get the numbers here in a minute. And I do agree, Mark. Matt is emotionally invested in GameStop. He's got a deep history with it, and
Let's make clear on that. Emotionally invested. in
you are, dude.
GameStop.
It triggers something in you.
Emotionally invested
It's
in
a $400
GameStop.
million company.
It's a nothing burger. It's nothing. Nobody cares about it.
But
I
it's not.
get it.
I mean, it's not
Not a
even
market
5, 6
mover.
years ago that I remember when Diablo 3, the video game, came out. Man, I was there, like at midnight, waiting in
Well,
line. Like I miss. It's nostalgic. We're old, right? Miss
yeah,
everything can just be downloaded online now.
I think
Too bad.
GameStop reminds me of simpler times.
It
maybe, yeah,
does.
yeah, a
Yeah.
little bit, yeah, for sure. Let's
Unfortunately, they made some really bad decisions along the way, though.
Oh man, they could have easily continued to evolve and adapt, but they did not. Let's break down the market here, Matt. We'll get back to GameStop here in a little bit. S&P 500 kind of hesitating right here, Matt. It looked like it wanted to rally a little bit this morning. We were up above that 3,400 handle,
Yep.
but I think the analysis yesterday, I really loved the way that you were breaking down the technicals about where that intraday trigger and pivot was, because traders need to understand that. And it was something I was thinking about even after the show yesterday. If we get confirmation, it's a completely different pattern. But some traders, they don't really get that part of it, Matt. And we have failed to have confirmation on the intraday. What are you seeing here, my friend?
No, I'm seeing the same thing. We talked about it yesterday, and I talked about how this was this was an unusual type of intraday reversal where it was more V-shape. And as you saw that more unusual V-shape recover from an intraday perspective, it doesn't create a lot of support along the way. And so when you're looking at that, like I said yesterday, yeah, you can call that confirmation if you see the continuation of the higher highs, higher lows from an intraday perspective. And the reason I was really kind of gravitating to the 3450 handle is that's right there. Not only that, right there at right where the moving averages are, it would reclaim those moving averages on a daily basis. But you also have a lot of chop right here from a resistance area of 3450. And what happened on the overnight action is yesterday you created the pivot coming into the close yesterday right there at 3420. On the overnight action, you really failed to see any significant price movement. And it wasn't the fact that there was no news on the overnight action. You actually had the ECB yesterday announce monetary policy, and they were par for the course, so there wasn't really anything to see there. They did what was expected. In the race to the bottom that the central banks are fighting right now, the ECB kept their monetary policy at 0 to a negative 0.5%. The governing body is going to continue to purchase debt under the pandemic emergency purchase program at 1.35 trillion euros. They're going to maintain their monthly purchases at 20 and 120 billion euros. So, throughout the end of the year, and basically they said that we're going to spend. They literally said this, and Christine Lagarde, who runs the ECB, she's trying her best to talk down the euro right now. I mean, she is trying her best. You got to give her a nice little golf clap for trying to talk down the euro, because we were talking a little bit just this week about if the dollar does reverse, you might see a little bit of pain economically in U.S. corporations, because a weak dollar really does help their exporting businesses. Well, the euro over the course of the last, let's take it off the 30-minute chart and look at the daily chart. The euro over the course of the last few months has appreciated from 106 all the way up to 118. And that is a massive appreciation in a very short time in a currency. And so it was very well known that Christine Lagarde was going to try to talk down the euro, try to reverse this trend a little bit. And she did her best job. She said they're going to, basically she did her old J-Pal Fed, impersonation. We will do whatever we can to support the economy in these types of economic pandemic crisis mode. She did all of that. She also talked about how they're going to not only spend that 1.35 trillion euro, that they are prepared, same thing, Jay Powell, they are prepared to do something additional. And so, you know, even though in normal times, what Christine Lagarde said would be portrayed as extremely dovish, and it was, it's still a race to the bottom here. Christine's need to do a lot better job. She needs to really fully embrace Jay Powell if she wants to see the euro go down like the dollar has been over the last 2 to 3 months. So even though we had the ECB, there was nothing that happened that was unexpected. And so coming back to the market here, there just wasn't a lot of news to really kind of drive that V-shaped recovery we were seeing from an intraday yesterday during the US stock market. And so on the overnight action, it kind of just ranged here in terms of neutrality. It kissed back off here in the pre-market hours. It kissed back off there at 34.20. And right now you're looking at a pivot at 33.80 that looks to be filling in real time. So we could see some decreased price action throughout the day here. But this is going to happen. It's going to happen in this market condition. And that's why you got to wait for that confirmation, and that's why you got to break that down from an intraday perspective. Now, if you do get back up above 34.30 and ultimately break that 34.50 handle, you don't have those technical intraday areas that will drive the market back down. And so that's why confirmation is so important there. But to me, this could lead, I don't think you update anything in terms of, oh my goodness, this is so ugly. This is a nothing burger so far. This is a slowing momentum candle so far. That's what you're reading it as. But if this pivot does fail and we don't reclaim it, at that point you got to start thinking about maybe neutrality in the market is the best case scenario here. And neutrality in the market, circa like we were talking about with gold, you know, isn't necessarily a bad thing. And you guys were talking about delta and theta and how this could be setting up for a potential theta opportunity where you're selling deep out of the money put options, you're writing covered calls against long-term investments. You know, the whole time I just kept thinking about the tortoise and the hare analogy, right? In the last 2 months, delta has been dominating and theta has been complaining that they're only making 3, 5, 10% monthly cash flow. And yes, I do say that with all the sarcasm.
As well you should.
But delta's been dominant. It really has. Delta got there really, really quick. Now theta's going to catch up to it, and that's not necessarily a bad thing.
Yeah, I mean, I would love, like, listen, and I think even for those delta traders and those individuals that focus primarily on price appreciation, there's a couple scenarios here I would really, really, really like. One, I would like that bottom tested like we've seen on the gold chart, like we saw on the broad market on the S&P 500 in June, where you have some test. Now, the gold thing would be fabulous, like absolutely. Oh my goodness. If that happened to the broad markets,
hey, Mark, I would have a lot more confidence in the market because I think we all question the fundamentals. I think that's like par for the course right now. But I would personally have more confidence if we had multiple retests of support creating a neutral environment, because then the analysis coming into the next breakout is not a continuation of the momentum. It would be the beginnings of a new trend. And for those of you who are new to technical analysis, the continuations of momentum can feel really, really good in the short term. But when you start a new trend, that is good for position traders. That's good for swing traders. That's good for the investors. They can really kind of visualize that next movement up, and not only on those daily charts, but when you look at the gold chart on a weekly basis, the more defense that is played on gold over the course of the last 4 weeks, the more confident I'm personally getting in gold. Because even though gold has not broken out of that 2000 barrier, and it really does feel like it's stuck in a range between 1920 and 2000, the longer this support level holds, the longer those bears who don't like gold just run away and start looking at something else. And so in the S&P, if we see something similar to what we saw, back here, where you had that consolidation for 3 to 4 weeks, and now looking at it on a daily chart, you can kind of see how that retest of that support level right there, once you started that new trend, you had that warm burner market that was really, really easy for a lot of traders. So, in these V-shaped recoveries, just go back, for example, Go back to the V-shaped recovery we had here. Now it's a different analysis. I totally get that. It is not an apples to apples because we're coming out of 38% downward movement in price. How many people missed out, including myself? How many people missed out on this initial surge?
Oh, I did. I missed.
Me.
I missed
How
out
many
for a
people
while.
missed out on that secondary surge?
I didn't trust that one
Okay.
either.
It wasn't until right here
Yep.
where we're like, okay, after this neutrality over the course of 3 weeks, where we're like, all right, now we're here, right?
Mhm.
Well, you had a nice little run up and then you had that retest. And what did you have? You know, a lot of people probably missed out on that initial recovery that lasted 2 days. Not a lot of people missed out on this run here. And so, yeah, in the short term, traders with bullish positions today, they're like V-shape, 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 V-shape. But for traders that are thinking about 4 weeks from now or 3 weeks from now, they're like, give me some neutrality, form those traditional support levels, and then we can all participate in that next run up instead of just simply recover some of the losses we had from late last week.
Mhm.
No, another scenario I wouldn't mind happen, and it's a little unconventional, but it's what we call the pinch, or at least, that's what Frank and I called it many years ago, and it's stuck with us, where you have these falling short-term moving averages, but rising long-term, and it can come in a lot of different formations. But we got that rising 50. As long as that 50 holds, good things will eventually happen for bulls. They might not happen this week. They might not happen next week. But, it's like as long as that 50 holds, and if it creeps up over the next 8-9 trading session, and as long as it holds, and it just needs a breather. Whatever the formation, whether it's a classic horizontal resistance support, whether it's a moving average consolidation, man, a breather would be healthy. And the uptick, the breakout from that breather, whatever that formation, that's going to be a very, very tradable signal.
Well, and I'm trying to map out a catalyst that's going to make it run one way or the other over the next couple of trading days. I mean, we're very light on the earnings reports. We don't have a lot of conversation. I know there's a stimulus bill being proposed by the Senate, Matt.
That's a nothing burger.
That's a nothing burger.
It's a complete nothing burger. Honestly, I can't believe people in financial news media right now reporting like that's actually a potential catalyst.
Yeah, I don't. 300 billion, number one. And number two is not going to pass. So
listen, I could have egg on my face for what I just said. Totally accept it. But I stand by it. I do not believe there's a scenario where Democrats and Republicans actually agree on stimulus. I agree with what Ted Cruz said the other day.
I don't think there's a scenario
No way.
agree on anything.
No way, especially after recent events. So no, there's no stimulus to be had here. So could that be a catalyst? Hypothetically, if it ever did, sure. I'm not sure the market's going to need a catalyst though. I still believe if you break out of 3450, if it waits for 3430 by 3450, if it waits a day or 2 or 3 days or 3 weeks, I still think you got to prepare to trade that if it breaks out of there. Yeah. So I'm not sure there needs to be a catalyst. I've seen a lot of price appreciation where there didn't need to be a catalyst at all. The market was up, Apple was up 2% earlier today. It's no longer. There was no catalyst for Apple being up 2% earlier today. And maybe that's why it's no longer up 2%. But no, I think you got to be prepared from a technical perspective, whether it lasts a day, whether it lasts 3 weeks. I think you got to prepare. If you don't get the double bottom, that's fine. You get the breakout, that's fine too. I think you got to be prepared to trade that regardless if it takes a day or 3 weeks.
I mean, if it takes 3 weeks, not only will be happy with theta, but I will go delta, maybe even a little more aggressive than I do on the tradable signal following a consolidation pattern. I really think a I mean, we said it a few times, but I think it is the analysis in the market right now. Because, if a slight up move tomorrow, I don't know if you can trust that. A slight down move tomorrow, I don't know if you can trust that. But if it takes a breather and then gives you a clear signal breaking out, getting above moving averages, getting above what would be at that point, multi-week intraday resistance level that now shows on the daily chart, I think that's going to be a really, really strong signal if it happens. I think it's worth being a little patient for.
I do too.
If you have an outstanding signal on an individual chart, that doesn't mean you can't trade that, right? Mm-hmm. But probably the Apples and the Microsofts and what will you are probably going to trade along with a broad market pattern.
Mm-hmm.
Yeah, and when the markets do this, most of the market will trade with one another until you see the breakout one way or the other, and then the market starts to separate. I think the best case scenario is a week to 2 weeks of consolidation, forming very, very clear support and resistance line, forming those very, very, very clear battle lines from a support and resistance perspective, and then seeing a breakout one way or the other that I believe can be traded either way, one way or the other. So I think that's the best case scenario, but a lot of times you don't get what you want in the market, right? I want this, I need this, but you don't get it. That's why I think you got to be prepared, whether it's a day or 3 weeks. I think you got to prepare for ultimately for where that breakout's going to be.
Yep. Know your
And
levels.
real quick, Damon, a few days ago before the sell-off, you said the S&P was more inflated than ever. There's a lot of ways to track the valuation of the S&P, Damon. So it really depends on what you're analyzing there. Traditionally speaking, I personally analyze the valuation of the market from the Shiller PE ratio, the Cape Shiller ratio, which is the prized off the prized economist Robert Shiller. And so basically what Robert Shiller said was the standardized PE ratio is not a good indicator in assessing valuation because of the fluctuations of price. And as the fluctuations of price, and what happens, Damon, is as the markets go down, because earnings are going down so much, earnings is going down faster than the price is going down. And so basically what transpires is PE ratios actually go up is as the market goes down because of the loss of earnings in those standard market cycle retreat, market corrections, market, what you would think of as a standard recessionary type market like we had in 08 or 2000. And so what Robert Shiller did is Robert Shiller kind of adjusted the ratio to really look at a cyclically adjusted PE ratio. And that's personally what I look at. Now, the Shiller P ratio is still underneath its all-time high, which is back in 1999. And so when you're looking at the Shiller P ratio, the Shiller P ratio would be the second most overvalued market of all time in comparison to the number one most overvalued market, which was the dot-com market. And so it really just depends. If you're looking at your indicators such as RSI and whatnot, that's a different discussion. So it really does. There's a lot of ways to categorize valuation, is my point. The one I choose to look at is the Shiller PE ratio. I think that's one of the better indications of, valuation from a price perspective. And that, as of right now, even with the sell-off, that is the second highest that we've ever seen in history.
Yeah, in
in other metrics, it is the highest valuation of all time.
Oh yeah, listen, if you want to get really depressed about all of your bullish positions, go look at any valuation metric right now.
Yeah.
You will question the sanity of all holdings. So only do that when you have a nice coffee, your relaxed state of mind.
I would say something stronger.
Yeah. Maybe you've had that nice massage. You went and treated yourself to a COVID-19 friendly massage. I don't know how that works these days. Just get in a
massage. Just sounded good though.
Didn't it though?
Oh, it sounded so good, Mark. I was playing the music. Like I was in the zone for like 2 seconds and it was beautiful.
Yeah, in my picture though, I just got disrupted because a clown came in and gave me the massage. It was really
okay. We went from massages to now we're talking clowns here.
So, but get in a Zen place because listen, there's no rational reason for prices to be at this point other than Jay Powell's magical liquidity market. So,
Dina said everybody that's ever known Mark. Yes.
That's right. Don't make me laugh today, Marky. I got a chest cold. I can't handle it. But I will say,
I'm in a delightful mood.
I know you are. I could tell. The clown joke almost got me there. I can't today. By the way, Jay Powell will be speaking next Wednesday. The FOMC is having their.
I just was thinking about Mark going with clowns into woods again. I'm not in a good space anymore. I was in a good space, and now I'm thinking.
Now I'm developing this fantasy of Janet Yelling in the clown outfit, and then Jay Powell shirtless but with suspenders and a fire truck.
Shirtless with Putin on the back of a horse. I'm all in.
So that's where I'm going. But hey, listen, we're to each their own, right?
Yeah,
So,
that's right. Markets are hesitating here today. There was a couple of economic data points, Matt, that were
Yep.
at least on the docket. Forexfactory.com went through that, saw the PPI number, core number, the unemployment claims number, and a crude oil inventories number, which I really don't care about. But I was interested to get your take on PPI. It looked like the PPI numbers came in line, close to expectations, but the core one was a little bit higher. What was your read there?
Uh, well, my initial reaction is I think you're going to see more and more and more of that in the future.
Mhm.
It's you don't want to overreact to inflation on any one data point, because inflation, there's a lot that goes into inflation, and inflation is an extremely lagging indicator, Like, for example, all the money the Fed's doing today isn't going to be really felt until over time, right? From an inflationary perspective. But you better get used to seeing these types of numbers. And you might say, well, Matt, it's just 0.3 versus the 0.2. And in core PPI, which in terms of core PPI, you don't exactly take into account food-based groups and energy-based groups. You raised at 0.4% versus the expectation of 0.2%. Last month was 0.5%. The month before that was 0.6% on the PPI report. And when you're looking at that in just one singular moment in time, you're like, oh, it's not a big deal. It's 0.3% versus the 0.2. Well, that equates to 1.2% additionally every single year, which would be about a 33% increase in inflationary pressure. And so my takeaway on the one number was nothing. It's really nothing to see. It's one data point. But when you're starting to talk collectively about if we start to see these trends develop and we start to see inflation creep up into the 0.3, 0.4, 0.5% month over month over month over month, that's going to have a pretty disastrous impact on consumers long term. And so that one data point, nothing to really see here. But I do believe the last 2 months are something that we're going to get used to in terms of this inflationary pressure on the marketplace. It's got to happen. There's too much money out there, right? So in terms of this, nothing to see here on just one moment in time, but over time, this inflationary pressure is going to put a lot of pressure on consumers. And for those of you who are new to economic reports and how they work, the PPI report is a leading indicator for the CPI report. And so the PPI report is a producer's price index. Producers have a tendency, i.e. all the time, of offsetting that inflationary pressure on the consumers through the CPI report. And so even though the PPI report is not one of those major inflationary reports, it is seen as a leading indicator for the CPI report, which is one of those major inflationary reports that the Fed tracks and that we as investors track as well.
Inflation's going to be here for a very long time. And I think you're right. These numbers, expect to see them even higher and above expectations and above those that we've seen in the past for quite some time.
oh, if you're not growing your money in the next 10 to 20 years, then you are going to wake up to a different reality. It
You
is
cannot,
literally like
savings
you can't.
can't be a plan. Yeah, it just
Because
cannot be a
sometimes I
long-term
get
plan.
lazy, right? Because, one of the things I love games, I'm not terribly monetarily motivated. I want a nice security and future and for my kids and all that. But, I'm a different cat that way, but I like playing games. But like the reality of the inflation really has a fire stoked under me over the last 5 months, because inflation is a real thing. It has increased my already strong belief in gold, in other assets that might be inflationary protection. You got to grow your money in the next 10, 15, 20 years. That's just the reality. And if you don't, you are going to be in a world of hurt. Individuals that do not grow their money over the next couple of decades, I feel bad for them. I really do. So, I mean, don't put it under the mattress, my friends.
Yeah, I agree with that. Maddie, flash through the commodities markets if you can. We did talk a little bit about crude oil, on the sell-off here recently, and you guys were talking about the developing bearish retracement. We have a little doji candle today. We're still a little bit away from those moving averages. It's got to cook there a little bit, Matt, doesn't it? For you to see any kind of tradable entry point, you got to still come up
Oh,
and
this
kind of
one's
catch up.
simple. This
Yeah.
one's very simple. This one is not difficult at all. You need to see one of two things. One, a retracement back up into 40, let those moving averages come down, kiss goodbye on the downside.
Mhm.
Consolidation, 2 to 3 days, break of 36.
Yeah.
Simple.
Yeah.
This one does not take, this one is when you get that initial breakdown of any trend, the initial breakdown a lot of times is very difficult to catch, because look at crude here. Crude, all of a sudden, crude is the most boring thing in the history of mankind for like 3 consecutive months, right? It like just a complete stay away, just boring. Nobody even wanted to talk about it. 3 days later, we got a trend developing. Now it's easy. You're looking for the retracement or you're looking for the breakout.
And I think I would prefer, by the way, the retracement, just me personally on this one. But the breakdown would definitely be tradable. I know that if you're a
It
momentum
depends.
trader,
It depends. It just depends. If you get 2 days and we break tomorrow, coming into a weekend on a Friday, that one's tough. You get 3 more days of consolidation coming into next week. You got a clear support level. Let's see that on the 30-minute chart. You got a clear support level right there at 36. We'll put it 36.20. You get that breakdown of that support level. That's a different beast. So, I mean, teach their own. Retracements in this market, one way or the other, have not been the easiest trade to make. They just haven't. Retracements have been actually very difficult in this market, in my opinion. So for me, yeah, the retracement would look better, and you would have a higher return versus risk, no doubt, and that should absolutely be traded, in my opinion. But the breakdown to me would be the continuation of the momentum you saw in the last week. And so I personally would prefer the breakdown, but I understand somebody being like, hey, let me see a retest of that 40 to see if this trend really does develop.
You know, Mark, I know, I believe you personally would not play crude bearish ever. I mean, you're not much of a short seller to begin with, and the commodity is more of a thing for you where you look for levels to get into it. Are you avoiding crude right now with the charts clearly leaning bearish, looking for new signals for bearish traders? Are you kind of avoiding it, or are you still doing
for the most part? I have a couple naked puts on oil related instruments like Marathon Petroleum, stuff like that.
stocks?
I've actually rolled those down and out in time so that if I input the shares, I have a much lower cost basis than I would otherwise. So I've gotten listen, because whenever I do analysis on Marathon or Exxon or pick your oil trading company, um, they're the tail. The crude chart oil is the dog, and if crude breaks down and the pattern doesn't have any support, like there's no support there, right? So all it takes is one little spark in the woods, and all of a sudden you have a gigantic forest fire in a sustainable downtrend. So I'm being more cautious on oil traded instruments, not going to enter any new positions because there's no support. You don't want to catch a falling knife. I'd much rather get in a situation 6 weeks from now, 8 weeks from now, where I have a more stable thing. Yeah, I'm not much of a short seller to begin with, but I totally support a bearish retracement short sell in this situation.
Yeah. It's hard to ignore the chart, and I was wondering how you were going to approach that. Probably just patience on that one. It sounds like a prudent way to play it. Gold next here, Matt, if we can. Obviously, we've talked about this pattern developing. You already looked at it a little bit earlier. Is your new trigger still 2000 if you're looking for a technical trigger? Because you got a little
There's
triangle.
nothing. I can repeat everything I've said in the last 3.5 weeks, as I say every day on gold. No, it's the exact same for me. Either one, you break out of the neutral range. Either you break out of the neutral range from if you wanted to be that assassin, pinpoint your accuracy and make sure you're getting in the highest probability scenario. You're looking for the close above 2000 with the potential trigger above 2010. If you're looking at it from an investor perspective, this support level is strong enough for you to make that decision right now.
Yeah, no, I'm with you. And I do believe most people are approaching it from that longer term perspective. So they probably already either have positions or looking to add to it slightly. The dollar, Matt, kind of bumped its head up there in that neutral range. I see Bitcoin holding support as well. There's not much in those charts we need to update from yesterday, though. Let's talk individual companies if we can. And you had a couple that were on your radar from an earnings perspective. Mark, you also had a few in the news that you were interested in. Go ahead there, Matty.
Yeah, let's talk about the two companies very quickly. Restoration Hardware, nice little Tackle 25 stock, a new addition to the Tackle 25 from last year. And, probably the stock that we added to the Tackle 25 that was probably the most surprising for me, personally, But when we dove into the numbers, you know, from a fundamental perspective, this was a company we really, really, really liked. And Restoration Hardware comes out today, and they basically 4.9 on the EPS number. The expectation was $3.44. That is an absolute wonderful beat from an earnings per share perspective. Slight beat on revenue at 709 million versus the expectation of 783 million. So right there in that neutral, but technically a beat there on revenue as well. Revenue year over year, quarter to quarter really didn't do much. I mean, it came in at up about 0.4%. A company I like, I'm going to say this though, these earnings numbers are decent. They're decent, but they're not up 24% decent.
So what do you think the market is getting wrong here? I mean, why are they
honestly,
gapping out?
I'd have to dive into it a little bit more in depth than I actually did. Just from a pure numbers in relationship to what I've been seeing recently, this seems like a little bit more bullish than it needs to be. And if you're a trader, you shouldn't have been holding through it. Tackle 25 is a long-term investor value / growth investment list. You're not doing anything besides just thanking the trading gods here. So I don't think there's anything to take away here from it. I could see, I wouldn't be shocked if we see a gap fill based on it. But that starts with it going underneath today's low. So no, I can't say for certain where the disconnect there is, Tim. I'm just saying from my personal understanding of earnings in comparison to what we've seen in other earnings reports this quarter, it seems like this was a gift of the trading gods.
You know, it's had a worm burner kind of uptrend here for a long time. You know, it's been a very, very consistent riding those moving averages, dipped with the market here recently. The gap out now is changing the pattern a little bit for me.
Listen, the concern for me is the growth year over year. Restoration Hardware is not a pure value play. It's not. It's got growth in it too, right? So you're not just talking about a pure value play. You're also talking about a growth play here as well in Restoration. And so the beat on EPS of 4.9 versus the 3.4 expectation is really, really, really positive. But overall revenue and then the revenue year over year growth at 0.4%. I mean, I've just seen companies get punished for that, just absolutely get punished this quarter. So it was the growth year over year that was concerning. Now to offset that, they did give an upbeat guidance. They did. And so it wasn't one of those, oh my God, robust, this is going to be amazing. But they did give an upbeat guidance. That's probably what really kind of drove this today was the upbeat guidance. But to me, it's a little bit of a gift of the trading gods here. To me, 24% is just way too much for what their earnings number was. This is a company that is both value and growth that just didn't have growth this year. And it's up, my God, how much percent?
It's crazy. 23% today. I'm trying to look up the year-to-date number. And by the way, what you said
Well,
earlier,
the year-to-date number is up about, it would be up about 70% year-to-date. Off the lows, you're talking somewhere around 300%.
Yeah.
So, I mean, Restoration's coming into a scenario where you got to show me something, right? You got to show me something. I don't think they showed it, but the market loved it.
Markets are loving it. And obviously we do like it from a long-term perspective. So it's probably going to stay right on the watch list for now. Don't you think, Matt? I mean, it's not like the numbers got you to a place where you're concerned about the company. It's just like, okay, this gotten too far ahead of itself. Is that fair?
Say again, T?
Just, it's gotten too far ahead of itself. Keep it on the watch list. You're not going to remove it from a long-term watch list.
No. It's a Tackle 25 stock. Everybody should be celebrating this. Yeah. This is a good company. I'm just saying the performance today is not justified based on their earnings from last night. That's all I'm saying. It doesn't change the underlying fundamentals of the company that this is a good company and one you should be tracking.
I can't wait to hear your take on GameStop's earnings, by the way, see if they have any justification as to.
They don't.
It's
just sad. I'm just sad.
Have you been in a GameStop in the last year?
I have. Yeah.
I have.
It's kind of depressing. I don't know.
It is. I was the only dude there with my son. Actually, it was my daughter. Me and my daughter went about right before the pandemic, and we were literally the only two people there. The guy was so nice. We had like a 30-minute conversation about, Disney, like Switch games for families.
Yeah, because you were probably his only human interaction that day.
Oh, I felt that way.
Like, I'm gonna
I
give this
enjoyed it.
guy
It was fun.
outstanding customer service.
Oh,
Do
we
you
sat
think-
there and talked. I gave him the best review ever. I thought he was one of the coolest dudes ever.
Do you think the physical cartridges though will make a comeback at some point,
No.
kind of like vinyl did? With music?
Hold on. Let me ask my son. He says no.
Yeah,
He's
you're
not
gonna-
there, so
Oh
don't.
my
I
God.
don't need to ask him.
I'll ask him. I mean, here's the thing. I mean, people
Hey,
do
hey,
geek
Tim,
out over
Tim,
the
do you think
nostalgia
the horse
stuff of
and
it.
buggy is gonna make a
Is the
tremendous
vinyl
comeback
cassette
sometime
making a
soon?
comeback here, bro?
Dude, vinyl records have stayed alive for sure. They're a
We need to
niche.
get a list of Tim's. Since we have Matt-isms, we need to get a list of Tim's obvious questions to state the obvious.
Listen, but look, those record connoisseurs, they'll tell you that the sound sounds better, and there's something about the ambiance. I don't think there's anything about the ambiance about slamming in an old, what
Are
do they
you
even call
kidding
it?
me?
Deck?
What are we even talking about here? Why would you have to you'd have to wipe it down. There was times you'd have to put toothpaste on the back. No, come on, we're out. No, it's digital.
No.
Tim, it's digital. We live in a digital world. It's an amazing
Digital.
thing. It's, you should wake up in 2020. It's like you've been in a coma for the last 20 years. But yeah, on the numbers, negative 140 on the EPS numbers. The expectation was negative 127. Revenue came in line at 942 million. Revenue decreased 26.7% year over year. Oh, that's all I got on GameStop.
Yeah.
Dude,
Yeah.
they're gonna be out of business one day. Let's just call
There's
it what it
zero
is.
chance they're not a bankrupt company at some point.
Because you know me, I love trash, right? I'll sell naked puts on. Shoot, I got naked put on Kodak for crying out right now, and more than one. So I love me some trash. I cannot see GameStop how they make it. I mean, they just
Guys.
they're fighting against a. There's nowhere to go.
GameStop has been dead for 10 years, but it takes a long time for a company to die. Okay. Talk about Sears and JCPenney. People have been calling for the death of JCPenney and Sears for 20 years now. And now we're finally seeing JCPenney's finally declare bankruptcy. So no, do I think GameStop's going away anytime in the immediate future? No, but there's no, unless there's some type of radical evolution of this company, there's no way this company doesn't go out of business at some point in the future.
Hey, speaking of bankrupt companies, mall owners, Simon Property and Brookfield Property, two huge publicly traded REITs, are set to buy JCPenney out of bankruptcy for $800 million, according to the Wall Street Journal. So JCPenney is getting bought up out of bankruptcy by a couple of REIT mall owners.
I've never talked more about Simon Property Group
Never
in
been
my
less
life.
interested in a merger in my life.
I mean, this company's been in the news here the last 3 or 4 months, no question about it, with all the things that they're trying to make waves on. First of all, what are they going to do with the JCPenney stores? Nobody was going to them anyway.
Parking lots, distribution centers, and
Open a movie
deals
theater
with Amazon and drive-through movies and whatever.
I mean,
Yeah.
I don't know, man. I can't imagine it is
Whatever.
a relaunch of the brand or them trying to do retail. If it is, man, I already hated malls. I would hate them triple if Simon's actually going to try to make that a retail thing work, man.
Yeah, Simon, I don't know. There's a lot of ways they could probably try to, create revenue off it. I don't know. I could understand, like I made the argument Amazon should buy them for distribution centers.
Mhm.
So maybe
Yeah, but
Simon's
what is
looking at
Simon
something different.
distributing?
Maybe they're looking to create a lease agreement with Amazon. I don't know.
Like, I don't know. It's like, oh my goodness. Like, I don't know. Have you guys been to a mall in the last 6 months?
No. Mm-mm.
Yeah, I miss the food court.
I don't like the mall anyway. I never.
Are you the old dude that goes to the food court?
Dude, I love the food court. Are you kidding?
okay.
They got that teriyaki chicken. Oh,
Yeah.
I love the food court.
corn dogs and Orange Julius?
Oh my, Orange Juliet. Oh, I like
Yeah.
the strawberry
Yeah.
Julius
Yeah.
particularly. So, but
Yeah.
yeah, I like the
Mhm.
food court of the mall.
Cinnabon. Now we're just
Mhm.
naming food court items. Let's get
They're just naming food. Like
Yeah.
that's what we doing.
We're all going to get hungry here as well. SPG, I have very little interest in the commercial real estate space. They're going to continue to make some wild moves, though. I guarantee they'll be in the news again here in a little bit. Maddie, what you got next?
Oh, that's all the earnings I had.
Mark, you had some news on Nikola, I believe. Is that right?
Yeah, I mean, there's a huge report out on Nikola. Nikola's down about 10% on the move. And of course, Nikola can be down about 10% on just a random Thursday because it's such a wild child. But Hindenburg Research came out and called it an intricate fraud and compared it to Theranos. Now, Hindenburg Research is short Nikola, so they're a short seller, and this could be, and Nikola's already came out ferociously attacking the accusation. You know, it's very, very, very worth knowing in case you were looking to get into Nikola, unless you had a naked put on Nikola, what the cause of the move down was today. And, you know, people have been calling Tesla a fraud for 5 years. So something against electric car vehicles that brings out a lot of opposition. But
Yeah,
yeah,
the
calling it a
opposition is
fraud compared to Theranos.
very vocal, very opinionated about it. There's no question about it. Not necessarily that they lack logic, but man, I mean, if they already do have a short position on it, it's like, don't you have to take that with a grain of salt a little bit, Mark?
Well, I mean, here's the thing, like, right, listen, I get into these things because Nicole is one of the companies that I actively trade. And I'm sorry, like, I'll trust GM on this
Mhm.
one versus some short seller out causing waves, right? I mean, why would GM, and once again, right, like, I don't know, I don't have any particular insight. This is just my monkey brain working. Why would GM take a significant stake in the company? What was it, 11%?
11%. Yeah.
Like, I mean, that's a legitimate stake. If they hadn't done a little due diligence, I don't think they were just like day trader, like, hey, let's go buy something today. You know, I'm sure
Mhm.
they did a little bit of research, the design, whatever they had behind it. So, you know, I doubt GM did that without doing any due diligence. So,
Yeah, I mean that's a $2-3 billion stake into the company. The GM just put cash out in that and GM. I thought it was a great move out of GM the other day when we talked about it. Still do. Still think it was a good move out of Nikola as well, partnering with GM. Still do. I'm taking this one here, Mark. I got to look into the report, but I got to take it with a grain of salt. When a short seller of an individual company comes out and bashes the company, obviously there's a reason why they're short. They're just giving their opinion, but I'll have to look
Well,
into.
that's fine, but at least they have the conviction to have a short position.
Yeah, I
I
mean
mean,
they are putting their
they
money where
have
their
to
mouth
have, they're
is.
putting their money where their mouth is. So I think, I don't think you can just say it's a grain of salt, but I do agree that there's nothing in the last 2 days that changed my opinion that I believe this is a good deal for GM. I believe it's a good deal for Nikola. It allows Nikola a marketing machine that they were missing, and allows GM the opportunity to revolutionize and update their product to a certain extent. I like it more for GM long term than I do Nikola, but I like the deal for both sides of the equation.
Yeah,
I do.
still.
The only other individual company, Xerox, which has been making the news a couple times because of Carl Icahn, uh, increased his stake again. Now, I mean, here's a nice dividend play that's formed a nice, what was it, you know, support level down at $15. Been pretty steady, pretty boring. I mean, that's what I mean. We're basically in a 5-month consolidation pattern. But Carl Icahn keeps buying more shares. So Carl Icahn sees something in Xerox. Maybe he's value. Maybe he's like, where else am I going to put my money? Everything else is absolutely ridiculous. But Carl Icahn increasing his stake. I thought that was
All right, can I get you guys to sign
yes,
up?
probably. I don't know.
Or
I'm in a not care
Mark's
mood. Like short,
no,
go
no, no.
long.
I'm not
I don't care.
saying, I'm
You
not talking
know.
about your cheating naked put ways. I'm talking about the breakout of 20 here,
I think. Oh, come on. It's a
adding
5-month
equity.
consult. I think that is investable if you were looking at the last chance to get into Xerox for whatever reason. Probably
Is that
nobody
like
was.
dateable,
You
investable?
know, but
Mm.
it is absolutely 100% tradable. Whenever you have a multi-month consolidation pattern, and they happen all the time in commodities, and they happen more often in stocks than people would think because this year's been so crazy. But multi-month consolidation patterns are a great breakout pattern. In fact, they're one of my favorite. I'm not a huge
Yeah.
breakout pattern except in 2 situations: high base and clear trend, and multi-month consolidation. And so if you get a breakout uh, of a multi-month consolidation, that's usually a pretty good tradable signal.
You know, I remember breaking this down initially a few months ago when Carl Icahn took his position, and we talked about how, you know, that potential breakout could have been strong if it ever, you know, starts to work towards that. You're now starting to see it. Now, Xerox is not my cup of tea. You know, it's not something I really track that much, but from a technical perspective, you know, I'm seeing all the reversal characteristics you need to justify it. The only thing you're waiting is a breakout of $20, which would be a close probably above like 2030. So I definitely see it, and I wouldn't disagree with anybody who's like, yeah, Xerox is my cup of tea. If Xerox is your cup of tea, this is what you're looking for, right? It's not mine, but I would not fault anybody for taking the
Yeah,
stab
and
here.
I like it a little bit more as a position trade than I do a swing trade, because this isn't one of those like,
Oh no, it's not a swing trading stock.
you know, it's
Yeah.
just not a swing. It's just not the stock's personality. And so one of those like a position trade system that can play the breakout, give it a little bit of room.
It's
Yeah,
hard to throw shade on Icon. He's got a good track record.
no,
Well,
I
and
mean,
the
yeah,
20 trigger's clean. I wouldn't fault anybody. I'd probably pass myself, find something different. It's not my kind of trade, but no, I got no problem with it. Matt, to answer your question.
No, I don't either. Again, not my cup of tea just because it's Xerox and I don't track the company, so I can't speak intelligently on the company and the fundamentals. But from a purely technical perspective, the, you know, tremendous drop in price you had during the pandemic you know, moment during March of this year, it's really consolidated, showed strength between 15 and 20. It's got clear support at 15. It's got clear resistance at 20. You can map it out from a technical perspective fairly easy. So I definitely see it.
Yeah, I see it as well. All right, outside of that, guys, a couple of upgrade downgrades are what caught my attention kind of as a last thing. Maddie, I saw several. Number one, you want me to go through
Hold
these?
on,
Or you
James, very quickly. James, did Icon, I don't know if maybe I'm missing something. Did Icon invest in Hertz? Was he one of the dudes that got Hertz?
he
years
was.
ago, I think. Yeah, yeah, he
Oh
did.
yeah, that hasn't worked out.
It didn't work out for
That
him.
one didn't work out.
Oh, and he made the mistake of selling his shares when they were at 70 cents because it was a bankrupt company, not having the foresight that Hertz would soon be at $6 in today's trading environment. He could have dumped his shares a lot higher. So
And I agree with James. James coming strong here. It hurts is a perfect name for a bankrupt company.
That's right. That's
it
exactly
really,
right.
really is.
All right, let's see if you guys agree with these analyst calls of the day.
Oh, we
You
got some
ready?
upgrade downgrades today.
Yeah.
Oh, hold on, I want to get to Paul. Paul asked about Disney, and I don't want to miss Paul. I love Paul. Disney breakout, guys. I'm a yes.
Yes, it's clean up here. I think it's more of a position trading type of stock.
Oh,
And that's
absolutely,
just the way
100%.
you approach it.
And I don't think Paul's talking swing trade there, but
Yeah,
I
yeah.
could be wrong. Position invest, absolutely. It's not as clean on the trigger here. That's why I think a position trade is a little bit more important. But you're starting to see strength, and you got something pretty clean above 137.50.
Yeah. Yeah. And they did get
Paul,
that
I
one
definitely
reset
see the
up.
breakout, Paul.
I think you can trade it for sure. So it's a yes for me. All right, let's do some upgrade downgrades here, boys, if we can. Let's see. Let's start with MKM. Start at Exxon Mobil, Matt. Exxon Mobil, if you can. They upgraded them to a buy.
Oh man, I thought you were going to say a downgrade, and I was going to agree. They upgraded to a buy.
They did.
Well, I
Oh
think they
no! What?
initiated coverage, didn't they?
Oh,
Initiated as a buy. Yeah.
They initiated
oh,
coverage as a buy. $55
oh,
price target.
oh,
Mark, you agree or disagree?
honey, it's okay. Oh, you need to. Oh, oh, gross.
Listen, I can't tell you with 100% certainty that Exxon is going to be not bankrupt in 20 years. Like, I think there's,
I don't think it's got bankruptcy in it.
I said it with 100%. I wouldn't bet on that, right? I'm just saying I've lost conviction on Exxon a while back.
I'm more on that they're going to have to cut their dividend. That's where
Yeah.
I'm at.
Yeah.
And you don't initiate as a buy with a company facing a dividend crisis that Exxon's going to be facing here. Exxon's got some really, really difficult choices to make from a company perspective, and they don't want to do tremendous layoffs. They don't want to cut their dividend. They're hoping above all hope that oil goes up in price. And with what's happening with oil, with the breakdown in energy, with the breakdown in Exxon Mobil, with now a bearish indication on oil, you're going to initiate Exxon Mobil as a buy. That makes 0 cents.
Mhm.
0 cents.
I could
No,
understand.
I don't know. I honestly, I don't like to throw cold water, but I honestly don't know what they're looking at here.
I don't
Technically,
get it.
fundamentally, behaviorally, ESG
Sector.
movement, dividend cutting.
Yeah.
I mean, the worst performing sector, not in the pandemic, before the pandemic, pre-pandemic, during pandemic, post-pandemic. What are you looking at? Who's making that choice?
Mike-
American oil has a really, really tough road ahead of it because the plain and simple fact is, unless you have a massive overhaul on the wage structure of American workers, it is going to be really, really hard to compete at if you have permanent $45 oil, 50 is the really robust time period. American oil has a hard road ahead of it.
Oh, I just got really bearish on the market because of this up. Tim, you gave me like a mini heart attack here. I can't believe somebody would upgrade Exxon Mobil. I honestly, I get it. You know, did they also initiate coverage as a buy?
Yeah. So they started this, and they didn't.
So
have
it
to,
wasn't neutral, and they went to a buy. It wasn't a slight buy. They initiated coverage as a buy.
Well, and if you think about that, that even makes it worse because this is a company that they did not have an official take on. They came out and said, you know what? We want to tell the marketplace that buy Exxon Mobil.
Hey, we're going to make a splash in the market. We're going to get our names out there, guys. Let's upgrade Exxon.
Okay.
My
All right.
goodness, why don't you do what everybody else does? Initiate coverage on Nikola is a buy, and everybody's like, oh, it's Nikola, it has this, it has that. Oh yeah, and then we're just making fun of people for initiating coverage when something doesn't have any revenue, which is
All right. I get it with Exxon. We don't agree.
Oh Lord.
Next one,
Almighty.
let's see if you agree or disagree with this one. Ulta.
And Exxon, I'm not done with Exxon. Exxon is a company I like. What are you doing upgrading it as a buy? This is top 10 dumb upgrades.
It is. And I like Michael and Dina's potential theories here. They must be drunks, or did they legalize weed in their states? I'm not sure.
Listen, don't offset they could have been drunk and high at the same time.
Let's be honest. The analyst who initiated coverage had like 1,500 shares at a high price, and he's like, "Man, what can I do to pump up this stock?"
No doubt. Oh, okay, Tim. I want to be very clear because I don't know if I was very clear. I disagree with the Exxon upgrade.
Oh, I was waiting to see if you agreed or disagree. I wasn't sure.
Okay, I want to make sure I was clear on that one.
All right, next one. Let's see if you guys agree with this one. Ulta.
Ooh.
ULTA. D.A. Davidson initiated Ulta as a buy.
I don't have anything to say on this besides no, I disagree.
I don't understand the space well enough because once again, I am not the kind of guy that is going to go into a salon, nor am I going to investigate research to understand the fabric of the industry, right? So I've never understood Ulta, good or bad. So I don't really have an opinion on it.
Pass and pass. I got no problem with that. If you don't know, it's hard.
Yeah, I don't understand their space. I mean, I just don't understand nor know well enough their space within the larger fabric.
Well, here's a space you do know well enough. Penn National Gaming. Rosenblatt initiated Penn as a buy. Another analyst coming out and putting it.
See, who initiated the coverage on Exxon? Who was that?
MKM.
That's how you initiate a coverage, is on a very popular company that everybody's talking about, and that is a darling of the market. That's how you get your name out there.
Look at that beautiful breakout.
Oh, it's beautiful.
Yeah.
Great breakout on Penn.
I mean, you don't really.
I don't disagree with that.
The gap and run, but you have to trade what you got.
From a fundamental perspective, I don't agree with the upgrade. From a growth perspective, and that's probably what they're looking at here, and from a it's getting into the social conscious, the national gaming movement, yada yada yada. I certainly understand the upgrade, so I would agree with the upgrade. From a growth perspective, discounting some of the valuation concerns, I do agree with the upgrade on that.
And I would like to call bullshit timing award because they played this breakout, like coming out with their upgrade on the day NFL starts. I mean, DraftKings is already up 8% on its own. Like it's you should have seen it coming, right? I mean, but upgrade
Listen,
on the day NFL starts, and everybody
hey,
knows. Yeah,
you're calling BS. I'm saying that's good political theater right there.
Strategy right
That's
So,
there.
good
but
strategy.
yeah, I agree
Yeah.
with the upgrade long-term goal. I mean, valuation's crazy, but I do like the space. And Dave Portnoy is he is a national
Well,
treasure. We'll just leave it at
according
that.
to Jim Cramer, the entire market is waiting on Dave Portnoy and what Dave Portnoy is going to
Jim
do.
Stop
Cramer needs to
listening to Jim
retire.
Cramer.
Jim,
Stop.
I mean, literally,
Stop.
Jimmy
Just
Shill has bent the knee to Dave Portnoy.
It's so
Jim
cute, though.
Kramer, for his own
So
personal
cute.
pride and self-respect, needs to go find a nice little house out in Vermont
Dude,
and
just
just
enjoy
call
the
it a
gardening. I
career.
love
yeah,
the
just
gardening.
garden.
The gardening
Garden.
is amazing.
Hey man, I want to do more gardening. So I got no
I do
problem.
too.
Garden-
Tim and I were talking last night about how both of
Yeah.
us need to do better in terms of landscaping in our yards. And I think both of us are speaking our book with our wives there.
Jim
But
Cramer's bending the knee to Dave Portnoy is the most pathetic thing I've
it's
ever seen in the
cute.
financial market media.
It's
It's
cute.
embarrassing.
It's
It
true.
is
It's so
embarrassing.
cute.
It's true. All right, one more here, guys. Let's do Spotify. Spotify here. Now,
Oh,
you know my feelings on this company. I'm very, very bullish. I believe in the company long term. I know that the valuations are out of whack, but the whole market is. Here's what Credit Suisse said. They said they're going to upgrade it to outperform, which is their version of a buy from neutral. So outperform their market counterparts here, Matt. Would you do you agree with this or disagree with this from Credit Suisse?
who are they categorizing as their counterparts? I think is the question.
You know,
So
let me think
if you're
through.
if you're analyzing against a Pandora, yes, I agree. If you're analyzing against the broader sector, I would disagree. So I'm going to say I disagree. I don't think it's going to outperform its sector.
Yeah. I'm looking at, I think that you would put Spotify with like 10 Cent Music, Twitter, Pinterest, even maybe a Facebook. I'm not sure how, if you're going to categorize it with the social medias.
I
Match.
just don't like the technical condition I'm seeing here. You got an M formation, double top, double bottom between 290 and really kind of that 240 range. If you're looking at a potential break at 240, which I'm looking at right now, you got a retracement coming into those moving averages. You're looking at a downward movement in price. A violation of 240 means there is not a support level until you get down to 200, and 200 being that significant hold number, old resistance zone over here. Right underneath that, you got the support level of the 200-day catching up to it as well. So no, I would not agree with the Spotify upgrade here. And, it does remind me of the old joke that, people, why does Spotify go up? Because people assume it's Shopify. So
That was
so
a pretty good one.
I'm
By the
gonna
way.
have a different take on it because I agree with the upgrade long term. I mean, the short-term technical conditions are terrible, and I wouldn't buy here because you could definitely have multi-month drift lower, even severe breakdown scenario. So the short-term technical scream, don't do anything today. I love the company. I love the app. I think it has. I think they're doing wonderful things. Long term, I think this is a winner. I think it's a winner. So it's all about finding a good price and a good situation to get in. But I like the company. I think it's got a real bright future.
Mm-hmm. I love the company. I know that they've been signing all these podcast guys recently and whatnot. The valuations are crazy. There's no question about it. They've got a negative PE ratio still. There are still completely concerns about that, and the technical conditions are concerning in the short term. Outperforms a tricky one because they're not coming out and right and saying, "Hey, we're going to $500 a share." They're saying, "Hey, we think it's good company. Will outperform its industry counterparts." So it's kind of a tricky nuance one with the way they upgraded that one. I'm not sure if I'd have to look at it and see exactly who they're comparing it against, Matt, before I could have a strong
it's
take on
usually
it.
those upgrades are usually done in comparison against the industry and the sector. And again, for me, I just don't think it's going to outperform the sector. And so because I don't think it's going to outperform the sector in the short term, and given the fact that we're seeing a lot of downward pressure from a technical perspective, I think the timing of this when if we want to give credit to whoever upgraded Penn National Gaming on NFL Day, you got to throw some cold water on whoever upgraded Spotify in a bearish type scenario here.
Yeah, chart doesn't look very
They
good
were
at all.
strategically trying to keep some level of support holding, man.
They're trying to hold it up.
We gotta
But
upgrade this
that
before it
what
goes
this-
down further.
Is that what this is boiling down to? Is
Oh,
just
if you think
everybody
analysts
takes
do
offense,
anything
right?
that's not totally self-motivated, which I know you already
Well,
believe that, so.
Of course, I believe that. But, when you're looking at the sector, though, I mean, communication here, bullish uptrend, you're still clinging above the 20 and the 50-day moving average, a trigger above 62. You would have to say price appreciation here. And in that time frame where you've seen communications drive from 52 all the way to 65, currently pinging at 61, you're looking at Spotify here in that same time frame, really kind of looking at neutral, forming an M formation. When you look at that from a longer term perspective, you see the M formation start to form there on the weekly chart. And, to me, this just, it might be bad timing here. I just don't agree with the upgrade. I think Spotify might see some pain here.
Last thing I got here today, guys, I want to talk football. NFL starts tonight. I don't know. You guys, Texas and Chiefs, do you have any interest
Before
in
we get into anything, I just gotta give, I mean, we gotta just talk about for just 2 seconds. The Senate will vote today on a skinny bill that's only $300 billion and includes liability protection lawsuits. So they've went from $1 trillion to $500 billion to the bill today, $300 billion. Are they literally just purposefully tanking it?
I think
No,
so.
they're not purposely. This is negotiation 101. When you can't meet a deal, you change the parameters of the deal and you try to spark it. But you also want to come across in a political season of, hey, we're trying to do something. We're trying to do something.
That's right. That's where my head is.
This to me, and it's been my stance on this since August 30th, since the deadline passed, has been very, very consistent. I don't see a deal getting done here. Not in political season. Political season is full of just a bunch of nonsense, just pure nonsense. If we could all just discount everything that happens in the next 2 months and you do that every election season, your life's better. I just don't believe that Democrats and Republicans are going to do anything to aid the other side. It's all about politics. And this is what drives people and myself crazy about politics, is once politics comes to the forefront, nothing else matters. So no, I just don't believe any deal is going to get done. This is negotiation 101. Anybody that's ever been in tough negotiations understands that. I just don't see this environment. I don't see this as an environment to get it done. And everything the Democrats and the Republicans are doing it has to lead to the conclusion that no deal is going to be passed here.
I don't think it's going to pass, and I don't think it moves the market, even if it did pass, quite frankly. I don't think it wouldn't be a bullish catalyst to pass $300 billion in relief.
No, not $300 billion.
No, nobody, the market would not care. In fact, the market would probably sell on it.
Sell on that news, probably. Yeah. Who you got in the game tonight, guys? Texans, Chiefs. You got the
I didn't know who was playing, so Texans, Chiefs. I don't know.
I don't. Chiefs, what are we doing?
Got to be the Chiefs, right? Defending the Super Bowl. I'm excited for football season. This game tonight, these two.
So you're watching?
I will watch for
Listen,
sure.
The Chiefs have, Mark, to give you an old college football analogy here. The Chiefs have 20 of 22 starters coming back from a Super Bowl team led by the best quarterback in the business. You got to go Chiefs there.
Yeah, minus
and
10,
not only that,
way.
Mark, another gambling thing, Mark, 20 or 22 starters in an environment where the Texans are bringing in all these new players and they haven't had any practice time.
Would you lay the 10 points?
10's a big number. I would lay 7. I would not lay 10.
Vegas line right now is 9.5 or 10, depending on the book.
I think it's a money line tease with a couple other games, but no.
Yeah.
Mark, are you watching?
Probably not.
I'm gonna say no to Mark. Mark's not watching.
NBC.
Listen, I just don't care right now. So, listen, but find me somebody. If somebody wants to make a $20 bet with me, then I'll all of a sudden become really, really intrigued with the game. I think I'm going to become the don't care unless I got money on it fan, which represents probably about 70% of NFL fans these days. So,
which is why DraftKings is probably still going to be a good play long term.
Maybe I'll go download DraftKings and do something. I might do that because DraftKings has a lot. Listen, I like DraftKings a lot, right?
And Stephen, I certainly understand that, people being disgusted with sports and how they're becoming political. I certainly understand that emotion. For me, sports is an out.
Yeah.
That's what it is for me. It's an out. I grew up loving sports. I grew up playing sports. I've loved the team camaraderie of sports and what it represents for me in my life. It taught me a lot of valuable lessons growing up, working within a team dynamic and overcoming adversity and working your tail off to achieve something. So I'm obviously emotional about it because it's had an impact on my life personally. But I certainly understand why people would be disgusted with this or with any organization that typically is apolitical becoming more politically. Politics drives all of us crazy, and we don't want to
It
see it
drives
in the
us all
things
crazy.
that we see as outs. And the old analogy of it's kind of like a drug for everybody, right? You get a zone out and leave the world to a certain extent. And so I understand both sides of it, no doubt.
No,
I'm watching.
I'm gonna go download DraftKings on my phone and see
Yeah.
if I can mess around, because they have the one thing DraftKings because they do like nightly things too, where you can set lineups and stuff.
Mark, if you're in a state that allows the in-game betting, you can actually bet in-game bets.
Listen,
like,
I got
live
3
money
naked
line,
puts
all
sold
kinds of
on
stuff like that.
DraftKings. I got to support my boys.
There you go, buddy.
So
There you go. There you go. All right, guys, that's it here for today on the Halftime Report 9/10/2020. We're going to wrap this one, and we are done. We'll be back tomorrow with Coach Frank, Breakout Frank, having some fun on a Friday as always. Any last thoughts from you, Mark or Matt?
Nope, I'm good.
We're
No,
out,
I'm
guys.
good tonight. Have a good night, everyone.
We'll see you tomorrow.